Okay, we can start. The YouTube thing is done.
We'll start admitting people.
Yes, I'll do that. Yeah.
Good evening, everyone. On behalf of the Malad Chamber of Tax Consultants and Confederation of GST Professionals and Industries, I welcome you all to today's session. On 11th July 2023, the GST Council reached the milestone of holding its 50th meeting. I am sure we have all had come across WhatsApp University messages about the recommendations the meeting had made, but we haven't had the access for a detailed and informed analysis of the same. That's why I thank our speaker today, CA Pranav Kapadia, on behalf of MCTC and CGPI, sir. We thank you for accepting our invitation to help us interpret the decision of the half-century GST Council meeting. Pranav sir is our very own Virat Kohli for the day. Before we begin the session, I will like to take an opportunity to speak a few words about the Malad Chamber. It was established in 1978, and we just held our 45th inaugural session with over 1260 members, which includes chartered accountants, advocates, company secretaries, and tax practitioners. Our main objective is to spread knowledge through news bulletins, webinars, seminars, RRC, and different study circles. The Malad Chamber is jointly hosting with GST-PAM, All India Federation Western Zone and Ahmednagar District and NTC at Shirdi on 21st and 22nd of August. I would also like to announce that the life membership fees of Malad Chamber is currently 2,500 rupees, and it will be increased to 5,000 rupees from the 1st of October. So please enroll at the earliest. I would now request Advocate Reena Khakkar, the Vice President of CGPI and also the Joint Secretary of Malad Chamber, to introduce CGPI.
Thank you, Khyati. Hello, everyone. So, yes, I am the Vice President of CGPI, and so as soon as we were discussing at MCTC to have this webinar on the recent amendments and notifications about the 50th, I, being involved with CGPI as well, I just proposed to Khyati that we can have this webinar jointly with CGPI, and Khyati immediately agreed to it. So thank you, Khyati, for it. CGPI was established in 2019, and since 2019, our endeavor has been to simplify the GST laws for all the practitioners in GST, all the professionals practicing in GST arena. And we have been doing it majorly through online webinars only, and we are always open to associate with associations like chambers like MCTC and any other association who has the same ideology like CGPI to spread the GST, to simplify the GST law for the professionals. And so we've been established in 2019. We've been simplifying GST law since then. And so yes, thank you, Khyati, for accepting my suggestion to involve CGPI in this webinar. And I would like to ask our CG Arup Das Gupta from Kolkata to introduce our today's speaker, CA Pranav Kapadia. Arup bhai, over to you.
Thank you, Rinaji, and thank you, Khyati. So I think first of all, I would congratulate the Malad Chamber of Consultants and also the CGPI for holding this wonderful session. Wherein we are going to discuss about the decisions that have been taken in the 50th GST Council meeting. So I would like to introduce today's speaker, CA Pranav Kapadia ji, who has been the president of GST PAM in the year 2017-18, and he was also the chairman of the Indirect Tax Committee of Chamber of Tax Consultants in the year 2019-20. He is a chartered accountant and also DISA. He is the partner of handling indirect taxes at APMH and Associates LLP. He's been handling advisory, litigation, and compliance in indirect tax for a long time. He has addressed number of seminars on GST, MVAT, and also CST at seminars across or organized across India from different bodies like GST PEM, Chamber of Tax Consultants, and WIRC of ICAI. He is also the proud owner of winning best group leader, best speaker at study circles, best article writer, best convener, and best pleader at mock tribunals. He also had the wonderful privilege of being a representative before the Honorable Finance Minister of India and the members of the GST Council and the GST Commissioners. He has been regularly contributing as an author to GST PAM and WIRC references, GST Review, Sales Tax Review, book, and also the study material for VAT laws. And he has written short publication on impact of changes in GST law on the real estate sector. So with this, in the interest of time, I have just shortened his introduction. So I really welcome CA Pranav Kapadia. Thank you. Over to Kathy.
Sir, thank you again. And the floor is all yours.
Thank you. Good evening, everybody. And thank you very much, Malad Chamber of Tax Consultants and CGPI for organizing this seminar. And thanks for inviting me for delivering my talk on the decisions taken on the 50th GST Council meeting. It has helped me also in going through each of the amendments through the BEAR Act and just trying to analyze what all changes have come. So thanks to all of you. Thanks Arup ji for the kind introduction, and thanks Bhavin Mehta for coordinating for this entire session till now. And of course, you are always there, and you have been very active at GSTPM, and I'm sure at NCTC also, you along with Khyati will take it to newer heights. So again, thank you very much for your kind invitation, and I think we can now straight away jump onto the topic. Yeah, I'll just share my screen. Yeah, is the screen visible properly?
Yes, sir. Perfect.
Yes, so good evening to each and all the participants also. Possibly, I know most of the participants, those who are attending over here. I've been regularly attending meetings at Malad Chamber. Frequently, I've come over at Malad Chamber also, and most of the members are also members at GSTPM. So most of them, I think we would be knowing each other. It's a pleasure being at Malad Chamber. Decisions. Well, yes, this was the Golden Jubilee meeting of the GST Council, a commendable effort by the Council. 50 meetings in a row over a span of 6 years. It's been 6 years that GST has come in. At the end of the 6th year, this was the 50th meeting. And of course, lots of calibration, overhauling was required in the various processes which are taking place in the administration as well as in the law. So with that in mind, the GST Council deliberated on lots of questions, lots of points, and there are almost 50 amendments or 50 recommendations which have come through this 50th GST Council meeting. So it's a huge agenda for us. And if we try to see the number of circulars and notifications which have come, so there are 10 circulars which have come right from circular number 192 to 201. And then there are 5 rate notifications, 17 central tax notifications, and one integrated tax rate notification. So in all, 23 notifications, 10 circulars. So basically, after those 50 recommendations, what has come is by way of all these circulars and notifications. Many changes have happened. It's almost like a mini budget, half-yearly budget, we can say. Of course, the budget approval, as we all know, the Finance Act, although it is delivered in the month of February, but the implementation thereof is taking lots of time. And it's been almost like since the last many years that the Finance Act, although Finance Bill, although it is given in the at the floor of the Parliament in February, on 1st of February, but the effective dates come very late. They come in the month of October, November, December. We have seen that all those happenings, and we have seen one or two changes which have come after 2 years after the finance bill has been enacted. So there are certain amendments like those also. Now, out of the various amendments or recommendations which have come to the GST Council 50th meeting, these are some of the points which we will be deliberating on. I don't think we'll be able to touch upon all the points, although some of them may be simpler points or could be just a change in rate of tax, etc. The main changes which we can see are one is on the count of GTA services. Then there is RCM on services provided by directors. Very much required clarification has come. Then supply of food and beverages in a cinema hall. This was also being debated. There was a backlash before some few days that some a big chain of cinemas is overcharging, and it is charging more for the food and beverages than the tickets. So much needed clarification on that. GST on casinos, race courses, and online gaming. This is in the backdrop of the Gamescraft judgment, which came in May 2023. Of course, this point is being deliberated right since the 47th GST Council meeting. I'll come to the nitty-gritties of that later. Then about the formation of the GST Appellate Tribunal. Then some relaxations for the annual return. Clarification with respect to ISD and cross charge. Again, a very much needed clarification. Let's see if something new has cropped up in that. Then clarifications with respect to warranty supplies. Again, this is in the backdrop of the Supreme Court judgment in the case of Tata Motors, which came in the month of May 23. Some clarifications with respect to warranty. Then clarifications on refund-related issues, 3B versus 2B or 2A mismatch. Special provisions for appeal for Tran 1 and Tran 2. Measures for streamlining. Then there are certain measures for streamlining the compliances in GST. Certain changes in rates of goods and services, and some other miscellaneous changes. I'm having more than 50 slides with me again to match almost with the 50th GST Council and the number of recommendations. It is just by way of coincidence, but yes, the slides are almost around 50. So let's see how much we are able to take up in this 2 hours allotted to us. GTA services. So what has happened in case of GTA services is that in July 2022, 18 July 22, they had come out that GTS can opt for forward charge. Some date was given to them. By this particular date, if you want to opt for forward charge, you'll be able to opt for that. Then, if a person wants to opt for forward charge as a GTA, for them during financial year 22-23, for opting for forward charge mechanism for them, the date was given that it should be done before 15th March 2023. That was the date which was provided. That date was too short a time for the GTS. The date was also extended. But there were still other issues. What will happen future? What if the GTA wants to again come back to reverse charge mechanism, which is prevalent now? So there were many issues in that. So in the backdrop of that, now what has happened? That the GTA, once he has decided to go under forward charge mechanism, he has to make an application in Annexure 5. He has to make an application, a declaration in Annexure 5. That declaration, which was earlier to be filed before 15th March, for that a timeline has been given. that the declaration is to be filed after 1st January of the preceding financial year, but not later than 31st March of the preceding financial year. Say, for example, for financial year 24-25, if the GTA wants to opt for forward charge mechanism, then he will have to opt between 1st January 23 and 31st March 2023 only. The option shall be deemed to be exercised for the next 10 future financial years unless GTA files declaration to revert under RCM. So declaration once filed. So earlier when the notification came, it was to be filed every year, and this was causing hassles. So now they have come out with a more simplified version of that once the option is exercised, it will be deemed to be exercised for the next and the future financial years unless declaration to revert the same is again filed. That declaration, if a person, a GTA, wants to revert back to reverse charge mechanism provisions, that is, the recipient has to pay under reverse charge and not the GTA, then for that, he will have to file a declaration in Annexure 6. Again, for that, the time limit and the window given is from 1st of January to 31st March of the preceding financial year. Similarly, the same example, if for 24-25, if a person wants to revert back from forward charge mechanism, say he has already opted for forward charge mechanism, the GTA has already opted for forward charge mechanism, and now he wants to revert back to reverse charge mechanism, then he should file the declaration in Annexure 6 between 1st January 24 to 31st March 24. And this is the provision. The notification entry is 93B, whereby notification number 11 of 2017 has been entered. Some issues with respect to GTA. So these were some questions which had come to me. I've taken it up. Whether this one-time option will be applicable from next financial year, that is 24-25, or be applicable for GTAs who have already filed their declaration for 23-24. Because since the notification has come now, the clarification has come now, what will happen to those GTAs who have already opted for forward charge mechanism in March 2023 for financial year 23-24? So whether again for 24-25 they will be required to file one more declaration and then it will become operational, or whether the application of March 23 itself will suffice? The answer is the application for March 23 itself will suffice, and they have given a clarification to that extent in the notification itself. Then, whether a GTA who has filed declaration after 1st January 24 to revert back to RCM, can he withdraw his application before 31st March 24 and continue with FCM or vice versa? So this question is that he has made an application. The GTA has made the application on 1st of January, but on 10th of January, he feels that I should not have made this application. I want to revert back. My calculations have gone wrong. I don't want to go either. I don't want to revert back, or I don't want to go under FCM. Can it do that? I think this is possible before 31st March. But the only thing is the portal should allow it, because I don't think the portal has that option, because once that annexure is filed, there is no option available for him again to intimate on the portal, because it's only a one-time exercise that he can do that. So that is going to be very difficult. So the GTA will have to properly plan his affairs before exercising the option. Then coming to the point about clarification regarding applicability of reverse charge mechanism on services provided by directors. Now here there were certain controversies, and what we have seen in the audits. The slide is not going well. It's done. So regarding services provided by directors, there was a controversy whether, first point was basic, that whether remuneration paid to directors will that be subject to reverse charge mechanism or not? And we have seen in the audits which have taken place recently, the department officers are trying to levy tax under RCM on even on the remuneration paid to directors, which actually is not the case. Because when we see the entry, it says that it is on services provided by the director. So if a remuneration per se is paid to a director, it is in the nature of salary. It is not in the nature of services which the director is providing. And rightly so, RCM should not have or is not applicable on the remuneration which is paid to the directors. So now we have this circular which has come. The circular says that services by a director of a company to the company or body corporate in his private or personal capacity. Example like renting of immovable property. Then RCM is not applicable. I think that it is written the other way. Renting of okay. So in case it is renting, so there are three types of transactions, or we can say events which are happening. One, the director is getting salary. Second, the director is having his own property which he is renting it out to the company. It could be an office premise or it could be a residential premise. And third, director is also getting sitting fees, or he is an independent director and he is getting professional fees for that. So there are 3 or 4 situations. So the point is on which of these categories of payments RCM would apply. So as far as remuneration is concerned, it was very clear right from beginning that on remuneration, it is a salary. On that, RCM should not apply. Between renting of immovable property by the director to the company and sitting fees, etc., being paid by the company to the director, it has now been very clearly mentioned in circular number 201 that in case if any services which are provided by the director in the capacity of director, example remuneration paid to independent directors, then RCM will be applicable. Suppose it's a renting of immovable property, the director is having a commercial premises, he has given on rent to the company. That renting of premises is happening in his personal capacity. It is not being given as a director, although he may be a director, but the renting of the premises is not happening as a director. If GST is applicable, that will be applicable under, if it is a commercial property, it could be under forward charge mechanism for that. Or if it is a residential property, the rules as applicable under reverse charge for residential property would apply. But per se, the company will not be liable to pay GST under reverse charge mechanism on property rented from the director, rent paid to director for immovable property. Of course, as far as sitting fees is concerned, yes, RCM will apply. I think these issues we have already covered up. Yeah, there is one point over here. What happens to past cases where director has not discharged his liability, but company has paid under RCM? Now, because of the controversy, say in the case of renting of commercial premises by the director in his personal capacity to the company was not sure and the company has paid tax under RCM, and say the rent was more than 20 lakh rupees per annum. The director has not discharged the liability, the company has discharged the liability. What will happen in those cases now? Well, of course, there is going to be a liability on the director otherwise, that the director is liable to pay and not the company. But since on the same transaction, RCM has already been paid on that particular transaction, though under a different category, and under RCM by the company and not by the director, here, of course, this will be subject to litigation, but there is a fair probability that the courts will allow the out-of-pocket theory, and based on that, since on that particular transaction, RCM has already been paid by the company on that particular transaction, the director will not be again asked to pay RC tax. Support of this circular can also be taken that earlier there was no clarity in law. Now the law is clarified. Hence, the director is not discharged. But of course, this will be all subject to litigation. In support, there are certain judgments under the erstwhile service tax law. I think one was in the case of an insurance company where such things had happened. Another was in the case of works contract cases where partial reverse charge was applicable and the companies were deducting, paying RCM under full reverse charge. And the service provider had not paid. And there the courts have held that since on that particular transaction tax has already been paid into the government treasury, it should not be again collected from the service provider. Of course, this is subject to litigation, but that recourse can be taken. Whether we can expect demand notices to be issued to directors now for the past cases and then expect regularization of such cases after another 5 years, I think notices can come. Whether GST under FCM or RCM for professional services given by an independent director as a professional, say written opinion given by President CA Khyati Vasani to the company. So, if the services are professional services given by an independent director, again, there will be a thin line of demarcation. If it is given as a professional separately, GST won't apply. If it is given as an independent director for other services as a director, then GST will apply under RCM. When the government says that private sector such as renting is not under RCM, whether the same holds true for renting of residential property as well. So here again the issue which had come up since last year, renting of residential property is subject to reverse charge mechanism. So now the position is when the director rents out his commercial property, he will have to discharge liability under forward charge mechanism if the limit is exceeding the threshold of 20 lakhs. Second, if it is a residential property of the director which is leased out to the company will have to pay under reverse charge mechanism under the category of renting of immovable property and not under the category of director, because it is in his personal capacity. The next is supply of food and beverages in a cinema hall. So there's a clarification regarding supply of food and beverages in a cinema hall being taxable as restaurant service, which attracts GST at the rate of 5%. A circular has been issued, circular number 201. There are two clarifications in that circular. The first clarification is supply of food or beverages in a cinema hall is taxable as restaurant services as long as the food or beverages are supplied by way of or as a part of service. The food has to be supplied by way of service, and they are supplied independent of the cinema exhibition services. We'll come to an example later on. So the first condition is the supply of food will be considered as restaurant service as long as the food or beverages are supplied by way of or as a part of service and supplied independent of the cinema exhibition service. It means that the movie ticket and the supply of food has to be separate, not combined. The second clarification, if the sale of cinema ticket and supply of food and beverages is a bundled supply, say in the price of the ticket, instead of 200 rupees, the theater is charging you 500 rupees for the ticket with supply of food, then the entire supply will attract GST at the rate applicable to the service of exhibition of cinema, which will be considered to be the principal supply. Now, we need to understand that there are various rates which are applicable in this. Services by way of admission or exhibition of cinematographic films, if we see, where the admission ticket is less than 100 rupees, the GST rate is 12%. If the ticket is above 100 rupees, the GST rate is 18%. If we see for canned beverages, the GST rate is 28% plus cess 12%. If we see for other items of food, it will be 12% or 18%. If we see the restaurant category service, it is 5%. So there are so many rates which are involved when we go to the cinema hall to enjoy a movie. we as a as a consumer, we just go to enjoy the movie, but there are so many things at the back end which happen, and GST is one of them. So there are certain questions that how does one determine the principal supply within the composite supply? There was one person who was asking me that myself and my son, we had gone to the movie because the spouse had gone out. The father had son and got to the movie. The son wanted to eat popcorn, hence the father took him to the movie. The father wanted to enjoy the movie, hence he went to see the movie. So now the question is that what should be considered the principal supply? Eating the popcorn or watching the movie? Right. So, and whose intention should be taken? The intention of the seller or the supplier, or intention of the buyer? In case of the buyer, if the intention of the child is to eat popcorn, but the consideration is being paid by the father, who is going to pay for the tickets? So what is more important in this entire thing? Luckily, I think the principal supply will always go with the intention of the seller. And the government has very clearly stated this in the circular number 201, wherein they have told that in this, wherever there is a combined sale of cinema tickets along with food and beverages, it will be considered to be the sale of cinema tickets, and the rate of cinema tickets will apply to that bundled services. Then certain more questions arise. What happens to canned aerated beverages being sold? The rate of GST and cess on aerated beverages is 28 plus 12%. Whether the same will also be classified under restaurant services in cinema halls. And nowadays there are vending machine also. The circular also mentions about the vending machines. That there are vending machines in the premises where the cinema halls are there. So whether 28%. So again, within that now, so I think first bifurcation is whether the food and beverages are sold along with the cinema ticket or they are sold standalone. So if they are sold along with the cinema ticket, the rate of ticket will apply, the GST rate of ticket will apply to the entire bundled service, sale of ticket being the principal supply. So one thing is clear. Coming to a second proposition now. Say the ticket is taken separately and food is separate. Within food now, so for sale of ticket, say 18% is applicable. Within food, now there are two options. Nowadays, you get it on your seat. You have to just order for the food and you get it on your seat. So whether, and other option is you go to the counter in the cinema hall and you buy from there. So if you get it as a service inside the cinema hall, the popcorn and the beverages, it's a service, clear cut, again it will come to 5%. What happens, you go to the counter and buy it, whether 28% will apply or again your 5% will be there. Luckily the circular which has come is very clear on this also. Here's the explanation, and it says that eating joint, so they have explained first what is restaurant service, then they have told that eating joint is a wide term which includes refreshment or eating stalls, kiosks, counters or restaurants at a cinema also. So whatever eating stalls are there inside the cinema, they will be considered as restaurant, and the cinema operator may run these refreshment or eating stalls themselves or give it on contract. Even if it is on contract to a third party, 5% will apply. The customer may like to avail the service supplied by these refreshment stack counters or choose not to avail. So that option is there. And also it is the operator can also install vending machines or supply any other recreational service such as through coin operated machines, etc., which a customer may or may not avail. So as far as it is a part of service, and according to me, I think the premises within the cinema hall where all this food supply would be happening, that will be considered to be a eating joint. And I think that is the entire purpose of this circular, to give the benefit of 5% of restaurant services. I think then for each item, there will be the rate of tax will be 5%. Of course, here we need to keep in mind that ITC will not be available when the rate of tax is 5%. So on the aerated drinks, or when 28% plus sales has already been charged, and then 5% is going to get charged, it will be a cost. The 28% itself be a cost, and then the consumer will be happy. When 5% GST, I enjoyed the cinema. So ultimately, it's just going to be a cost, the ITC. Till now, it was getting credited, but that won't be the situation in future. There was one more point, I think, which has not come, was regarding whether anti-profiteering provisions will apply in these cases, and what will happen to ITC in such cases. Because for 5%, there will be no ITC. For 18%, ITC will be applicable. So then, of course, the cinema operators will have to keep a proper demarcation of services which are directly for taxable supplies and services which are which are covered by the notification 11/2017, and specifically ITC is not allowed on that. So here that bifurcation will have to be kept by that. Okay, the next is regarding the report on casinos, race courses, and online gaming. Here also, I think there is a lots of controversy which is happening. The first report came in June 22 in the 47th GST Council meeting. They were not able to reach to a consensus, and it was decided to re-look into the issues. Then the second report came in the 50th GST Council meeting. There also, in the press release, it is mentioned that no consensus could be reached on whether the activities of online gaming, horse racing, and casinos should be taxed at 28% on the full face value of the bets placed, or on the gross gaming revenue, and that the GST Council would have to decide. Here, let's understand the recent judgment in the case of Gamescraft Technologies Private Limited of Karnataka High Court on 11th May 2023. Just trying to give you a brief of the facts involved in that. There was a demand of 24,000 crores on Gamescraft Technology. There was a raid in 2021, or we can say an investigation by the DGGI, wherein they had considered the revenues which were earned by Gamescraft as taxable supplies. And on that entire revenue, they had levied GST. Bank attachments, etc. So many things that happen, property attachments, etc. Now, in the High Court, what was the decision? Now, basically here, in Gamescraft Technology, the entire focus was on online gaming. And nowadays, if you see online gaming, so one thing is online gaming. Another thing is playing it with stakes or without stakes. There could be only a game of skill or a game of chance. Game of skill, maybe with stake, without stake. Game of chance always is akin to almost betting or gambling. Now here the main focus was on the game of rummy. The game of rummy, whether the game of rummy is a game of skill or a game of chance. Because here, although skill is involved, there is a chance also. Based on various judgment and also based on the judgment of All India Gaming Federation of Supreme Court, the Karnataka High Court ruled that the game of rummy in this case is a game of skill and not a game of chance. Right. So that was the big controversy, and the entire demand of 24,000 crore was quashed. Now, before the amendment, of course, this is the proposed amendment. This is yet to become effective. Currently, for games of skills such as esports, puzzles, and card games, etc., 18% GST is chargeable, and that too only on the platform's commission or service fee on gross gaming revenue, total stake minus the distributed winnings. For example, if say at present, if two persons, there are Mr. A and B, they are playing a game of rummy, say on that portal or on that gaming app. Say each of them pays 200 rupees each, and the prize money is say 360. 200 plus 200 is 400 rupees. The prize money is 360 rupees. The gaming company gets 40 rupees, 20 rupees each from Mr. A and 20 rupees each from Mr. B. So that's the revenue of the gaming company, because balance 360 rupees is the prize money which will go either to A or B, whomsoever wins. Right. So as of now, 18% GST was applicable or is applicable on the 40 rupees which is earned by that company. Gamescraft was actually paying GST on that 40 rupees. It has duly discharged. It had duly discharged and paid. The question was that whether what happens to the balance 360 rupees, whether it is liable to GST or not. And since the court has now held that it is a game of skill and not a game of chance, and hence only on the 40 rupees or the revenue which is earned by GameStop, on that only the GST is likely to be paid. Here we need to keep in mind Schedule 3, entry number 6 regarding actionable claims. Schedule 3 of the CGST Act mentions enlist the supplies, enlist the activities which are neither supply of goods nor supply of services. Actionable claims have been considered to be neither a supply of goods or neither a supply of services. No GST is payable on actionable claims except 3 items which are mentioned therein: betting, gambling, and lottery. So if there's a betting, gambling, or lottery, on that GST is payable. But on other actionable claims, GST is not payable. So in this game, in this year, this 360 rupees, if Mr. A is winning, it is an actionable claim based on his actions he is getting it. There is no liability to GST in such cases. For games of chance, including gambling at casinos, 28% GST is already chargeable on the total bet value. So already there is a tax. It is not that there is no tax on this. There is already a tax on this. Public listed company made an announcement immediately after this announcement had come that our gaming revenues or online gaming revenues only 5% of our total revenue. So this will not have a big impact on us. This is a huge industry and the impact is going to come, but that is how companies are taking immediate steps on the council's decisions. Okay. So now, after the 50th council, I'll take you one step ahead. The 51st GST council was held in August, this August. And there, the only discussion, this was a virtual meeting, and the only discussion was on these 3 parameters regarding casinos, horse racing, and online gaming. See, the earlier 3 words used in Schedule 3 were betting, gambling, and lottery. Here the words are casino, horse racing, and online gaming. So both these words are different. And here they have proposed that there will be an amendment in Schedule 3 of the CGST Act to provide clarity on the taxation of supplies in casinos, horse racing, and online gaming. So possibly the 3 activities are already made liable to tax in that actionable claims list. And here these 3 will get added separately. Or maybe some more, because there is only some tax which is getting paid in the case of casinos and horse racing. But we will see how that notification comes. Then insertion for a specific provision in the IGST Act to provide for liability to pay GST on the supply of online money gaming by a supplier located outside India to a person in India. This is something like that OIDR services. There's a person who is outside India and the game is being played by a person who is in India, and that person is providing the services. Now for them also, to bring them in the GST loop, they have said that there will be a single registration in India for the said supplier through a simplified registration scheme. Then they have mentioned here that in case the supplier fails to comply with the provisions of registration and payment of tax, then there will be blocking of access by the public to any information generated, transmitted, received, or hosted in any computer resource used for supply of online money gaming by such supplier. So one thing is that they have made him liable. And second thing is that in case if they don't pay the tax, apart from all other penalties which are enlisted in the law for non-payment of tax and non-registration, there will be blocking of access to the information itself, which is generated, transmitted, and received or hosted in the computer resource. See the way the government is working; they are working much beyond of what we think. Fine. Then there is a discussion regarding the valuation. Valuation of supply of online gaming and actionable claims in casinos may be done based on the amount paid or payable to or deposited with the supplier by or on behalf of the player, excluding the amount entered into games or bets out of winnings of previous games or bets, and not on the total value of each bet placed. So what do they mean over here? Here they mean to say that, say Mr. A is going to a casino. He is buying the tokens or the chips for say 10,000 rupees. On the first instance of buying those chips of 10,000 rupees, GST will be levied on the entire portion. Today also, out of the 10,000 rupees, say 1,000 is the charge for admitting into the casino. On that 1,000 GST is payable. On the balance 9,000 GST is a issue, is a controversy. Okay, now here what they are telling is, here they are clarifying on this point, or rather is still going to get clarified. This is a recommendation of the GST Council, that on that entire 10,000 rupees, 28% GST will be payable. Okay. Further, what happens? That say from that after winning the first game, the amount becomes 15,000, and the person again puts 15,000. Then he again wins, it becomes 20,000. He again places bet of 20,000. So on every bet which is placed, there will be no GST. Only on the first instance when they are taking the chips at that point of time, GST will be leviable, and not on value of each bet. Okay, coming to some other measures. GST appellate tribunal appointment and conditions. I think this is the need of the hour. 6 years have passed on, but there is no tribunal. Lots of cases are lying which are yet to be filed in the tribunal. Lots of controversies, lots of adverse judgments against the taxpayers. Tribunal is the need of the day. GST Council is trying to set it up since many years. In the last 3 meetings, they have been telling that this is going to get set up. In this meeting, they have told that it will be set up from 1st of August 23, but I was not able to find the exact notification of when it has become operational. That whether this actually has become operational and whether the president has been appointed or not. According to me, that thing has not happened. What has happened is Section 109 has been introduced in the Finance Act 2023. Therein, they have told that they have actually substituted the entire Section 109. This was in the Finance Act 2023. That Finance Act 2023 has given two bifurcations. What will be the principal bench? What will be the state bench? The principal bench will consist of the president, then one judicial member, one technical member from state, and one technical member from the center. So there will be 4 judges on that bench. There will be the principal bench, and the cases which will be heard by the principal bench will be only the cases which relate to place of supply. This is something related like the CST appellate tribunal, which we had under the VAT era. Any interstate issues, interstate supply issues, they will be heard by this principal bench. For all other cases, it will be heard by the state bench. The state bench will also consist of 4 members. Similarly, one will be the senior most member, who will be the vice president. Then one judicial member, again one member from the technical member from state, one technical member from the center. Now in that, there are 2 bifurcations. If the tax demand is less than 50 lakh rupees, the case may be heard by one member, by one member bench. subject to approval of the bench vice president and president of the appellate tribunal. It will go to those. It will go to one member bench. Above 50 lakhs, it will go to the two-member bench. And when the council thinks fit that 4 members are required, they will keep it at 4-member bench. But in general, I think it will be 1 member and 2 members. Even currently, if you see, the VAT tribunals are having 2 members, 1 judicial and 1 technical, and the session is also having 1 judicial and 1 technical. Possibly those same things will ultimately continue. It appears to be so. But let's see the final implementation of that. Further, relaxations for annual return GSTR 9. I think we all are now well aware of this entire provision. So the 2 crore limit has been continued for financial year 22-23 also for an exemption has been given from filing of the annual return in GSTR 9. And the relaxations provided in 21-22 in respect of the various tables of form GSTR 9, because we see over all these years, there were certain concessions given, relaxations given of what columns to fill, what columns not to fill, where to club, where to not club the data, all those relaxations. Those relaxations which were there in 21-22, they have continued in 22-23 also. So nothing new as far as the GSTR 9 is concerned. So this is not going ahead. Okay. One more clarification with respect to ISD and cross charge. In the 50th council meeting, the council recommended to clarify through a circular that ISD mechanism is not mandatory for distribution of input tax credit of common input services procured from third parties to the distinct persons as per the present provisions of GST law, and also issue clarifications regarding taxability of internally generated services provided by one distinct person to another distinct person. Now, we all are well aware that branch of head office of a company and its branch are considered to be a distinct persons if both of them are having the same pen and both of them are situated in different states. Then they are considered to be distinct persons. This internally generated services word has been used in this circular, which has come from the council. We generally use the term cross charge. All professionals have been using the term cross charge. The term cross charge has not been defined anywhere in the GST law, but it is a nomenclature which is being used for internally generated invoices, services for which invoices are issued by one distinct person to another distinct person. The council has also recommended to amend GST law to make ISD mechanism mandatory prospectively for distribution of ITC of such common input services procured from third parties. So till now, ISD mechanism was optional. It was not mandatory, and now they will have to bring a specific amendment in the GST law, section 19 of the CGST Act. They will have to bring a specific amendment to make the ISD mechanism mandatory. So circular number 199 has been issued in it. Let's see what are the points involved over here. So whether ISD is mandatory, ISD is not mandatory. There is an option to distribute ITC of common services by way of input service distributor. So the company has the option as of now till date to either take ISD registration for distributing the common services or issue tax invoices upon the branch offices to whom the services are attributable. So this option has been clarified. This option is available. Okay. Then comes that whether once having exercised the option of issuing tax invoices to the branch, that is having a cross charge, then how to value that? So the point is, now your example has been given in the circular regarding HO and the branch office. It could be a reverse way also, where the branch may be providing services to HO. But here what we are discussing in this example is services are being provided by the head office to its branch office. The question is whether head office is mandatorily required to issue invoice to branch office who is eligible for full ITC for internally generated services. So basically, whether a head office is required to cross charge to its branches for the services which are generated, which are provided by the head office. Now, what could be those services? Those services could be admin offices, services which are done at the head office. There could be accounting, payroll, marketing, so many things which are done by the head office centrally, and the charge is made to the branches and it is collected from them. So the clarification has come that whether it is mandatory to issue invoice to the branch office, the answer is no, it is not mandatory to issue invoice to the branch. The value of supply as per Rule 28 of CGST rules read with Section 15(4) of the CGST Act will apply. As per Clause A of Rule 28, the open market value is to be taken. As per second proviso to Rule 28, where the recipient is eligible for full input tax credit, the value declared in the invoice will be deemed to be the open market value. This is already mentioned in the second proviso to Rule 28, and most of the companies and most of the professionals have taken this stand that although Rule 28 in point 1, clause 1, 2, and 3 of the Rule 28, clause 1 speaks about it is to be at open market value. Clause 2 is about value applicable to goods or services of like kind and quality. Clause 3 is valuation as per Rule 30 and Rule 31. After that, there is a proviso which says that if the head office wants to transfer goods to its branch at 90% of the value, then there is a provision whereby it can be allowed. And then there's a second proviso which states that in case if the recipient of the services is eligible for full input tax credit, then the value as mentioned in the invoice will be considered to be the full value of consideration, because ultimately these are transactions between related parties. Let's understand this cross charge is always happening between related parties, and that arm's length provisions always trigger in such cases. Many companies have taken varying stands in such cases. Some have issued invoices, some have not issued invoices. Some have made a valuation at a particular value, others have not made similar valuations. Some have issued invoices, some have not issued invoices at all. Some have issued invoices of token amount of 1 rupee, 100 rupee, 1000 rupees for cross-charging to their branch. Various issues are there. So now what the clarification has come, that in case if the recipient is eligible for full input tax credit, whatever value has been stated as per Rule 28 second proviso, that value will be considered. There will be no dispute with regards to that, and if the whatever value has been stated, that will be deemed to be the correct value. Fair enough. Second, in case if the HO has not issued invoice to the branch office at all, the value of supply may be deemed to be declared nil and may be deemed as open market value. If the head office has not issued the invoice to the branch, no problem. But the only condition is the branch should be eligible for full input tax credit. If it is not, different rules will apply. So here, since the branch is eligible for full input tax credit, even if you don't issue the invoice, the value will be deemed to be nil. There will be no liability on the head office. Okay, then the question comes, what if the branch is not eligible for full input tax credit? Then what should be the value? And what should be included and what should not be included? Then basically, where the branch is not eligible for full input tax credit, in those cases, the value will be as per Section 15, read with Rule 28, 1, 2, and 3. Whatever the clauses that the company fits into, if the open market value is available, that will be the first preference. It will be at open market value. Second, like kind and quality. Third, at cost. Fourth, that is Rule 30 and Rule 31. And the next is 90% of the value of consignment when it's sold to the agent. Right. So all those options are available, whichever fits into in that chronological order. You need to satisfy them first, then only it will apply. Only thing is that the proviso, if it is getting triggered, the proviso will not work in the chronological order. The proviso will have importance over the chronological order. So if as per the proviso, first proviso to Rule 28, the transfer is happening at 90% value, the proviso will prevail and not the open market value point will prevail. So that we need to keep in mind. Okay, so first will be the open market value or as per this order. Second is what all should be included. And the most important point, which was the matter of controversy in all the companies, is whether the employee cost should be included or it should not be included. We had the AR in the case of Columbia Asia and similar other ARs, wherein even for the employee services, they should get included in the value of supply. The view among the professional community was that this should not be included. That view has prevailed and good sense has prevailed over the council, I can say, wherein they have brought out a very good clarification that cost of salary of employees need not be included in the value of supplies being made from the head office to the branch office or vice versa. So the question, I'm reading the last part of this slide, whether cost of salary of employees of the HO involved in providing those services to the branch office, which is not eligible for full input tax credit, is mandatorily required to be included. The answer is not mandatory to include, whether or not branch office is eligible for full input tax credit. Fine. So employee cost is not required. And the most important was what about the director's remuneration, the CFO remuneration. The CFO is working for the entire company. How to value that, how to bring into that. So lots of controversies and many companies have taken that stand. So one thing is very clear, it is not to be included. And the more important point, a saving grace for all the companies is that even if you have already issued those valuation invoices, wherein the company has not considered the employee cost, that also have been given a saving grace by this circular, that it is not mandatory to include whether the branch is eligible for full input tax credit or it is not eligible. So a very good circular, and let's hope this will reduce lots of controversies in this regards. So one point which can trigger up here by the department, the second proviso to Rule 28, because now entire crux is on whether the branch is eligible for full input tax credit or it is not eligible. So what do you understand by the term eligible for full input tax credit? So if I am not eligible as per section 16, then whether this will trigger. If there is some ineligibility as per section 75, then whether my branch becomes ineligible. So again, I will fall back to the not full eligible, and hence all the valuation rules, etc., everything will apply in our case. That controversy can again crop up from the department. But according to me, eligible for full input tax credit should be considered and read in the context of that particular transfer or the cross charge which is happening between the head office and the branch office, and not all the activities of that branch, whether they are eligible or ineligible. Say at the branch, there could be motor car expenses which are ineligible. Does that mean this entire will go for a toss? That is not the purpose of this second proviso. The proviso cannot be read in isolation. It has to be read in the entire context of the law. And the entire context of the law, it refers, according to my opinion, this goes, it should be read along with the main Rule 28, which states that there has to be a charge and how it has to be valued. And why and when that valuation is done, the recipient, it should be eligible for input tax credit qua that invoice or qua that proposition. Now, what could be the examples? Say there is a stock transfer of goods which is happening from the branch, from the head office to the branch. and the goods are taxable at 18%, the branch is getting the goods, it is selling at 18%, no issue at all. I think their issue will not come up only. If the head office is selling exempted goods, branch is receiving the exempted goods, no problem. Because both will be exempt. Where is the question of charging it? Third proposition, branch is transferring taxable goods. The head office is transferring taxable goods. The branch is selling exempted goods. There, that problem will come, because if the branch is manufacturing those goods which have come from the head office through a cross charge, then it is not eligible for full input tax credit. There is a reversal which is going to happen at the branch for those goods, and hence it should not apply. Then one more proposition is, what about the services? Say there's a cross charge of services which is happening from the head office to the branch. The branch is only providing exempted services or is selling only exempted goods. There is a cross charge of services from the head office to the branch office. Then in such cases, the branch is not eligible for full input tax credits. There it will trigger. I don't think for the other parameters this will trigger. Well, there are a few AR of Tamil Nadu, this Thirumalai Chemicals and Specs Makers Opticians AR. This can come to our help, wherein these questions have been discussed in the AR, and there also the view taken by the appellate authority is in favor of the taxpayer. Luckily so, because generally the ARs are not generally much relied upon. Of course, this is only a saving grace, just the view which has been taken by the AR in such cases, which can be taken up. Okay. Next is warranty. Again, here, like we saw in the online gaming, this is the Tata Motors decision in the case of the Supreme Court decision in the case of Tata Motors, entirely on warranty. The entire decision, I'll just tell what went wrong in Tata Motors, or rather what happened in Tata Motors. Everything was about the warranty products, and the Supreme Court has ruled in favor of the revenue in all the parameters which were being argued at the Supreme Court level by Tata Motors, and Tata Motors has not succeeded in any of the arguments which were held, and liability was cast upon the dealer. So what happened in Supreme Court? Just let's have a glimpse of that, then we'll come to what the circular wants to say. This is the gist from Taxman, so I thought let me just take up that only. Sale of goods, warranty replacement of defective parts. Defective parts were replaced by dealer from its own stock pursuant to warranty clause appended to sale of automobile. Credit note was issued by manufacturer to recompense dealer when defective part were returned to manufacturer by the dealer. So what had happened in this case? Of course, we all understand when the product is sold under warranty, there's a free replacement which is given to the final consumer. The distributor had replaced the defective parts. More so, the defective parts were replaced out of the own stock of the distributor. It was not the stock of Tata Motors. It was his own stock. And pursuant to the warranty clause appended to the sale. Now, since the distributor had used its own stock, a credit note was issued by Tata Motors. Okay, you have supplied goods, say worth rupees 1 lakh rupees. For the warranty products, you are given a credit note for that. The Supreme Court held that the transfer of property in goods took place from the dealer to the customer. Therefore, when under warranty claim or under warranty clause, dealer received credit note, transaction between manufacturer and dealer was construed to be as a sale subject to levy of sales tax. The movement of goods happened from the dealer to the end user. The goods were transferred, but this was in pursuance that they had to actually sell it to Tata Motors. Tata Motors was actually required to give them free warranty products, and those free warranty products were to be supplied to the customer. But since in this case, Tata Motors, these defective parts were directly replaced, for which Tata Motors had given a credit note. The Supreme Court, in a very detailed judgment referring to so many Supreme Court and High Court other judgments, has taken the view that the replacement of those parts is considered to be a sale by the dealer to Tata Motors. So the dealer who had was liable to pay sales tax as per so and so sections of Rajasthan Value Added Tax. One more parameter in that judgment. There are actually 4 parameters. I am taking up only 2 parameters over here. The expression price under the Sale of Goods Act, although limited to money consideration, cash or deferred payment, but under definition of sale under sales tax legislations also includes valuable consideration. Credit note issued by manufacturer in favor of the dealer. Now it is on the credit note which is issued by Tata Motors for replacement of defective part by dealer from his own stock during warranty products is valuable consideration within the meaning of definition of sale under both CST Act as well as the respective state enactments under consideration. Right. So even though the credit note was issued, it was considered to be a consideration, that credit note was considered to be a consideration for the sales deemed to be made by the dealer to Tata Motors, where the goods were supplied to the end user under warranty. So this was the crux of these 2 judgments. Based on this judgment, which have gone against the dealer, we come to the circular which has been issued under GST for the same. A very good clarificatory circular will take up each of the parameters which are discussed in the circular. And this circular considers all the, I cannot say all, but the various aspects which can come for consideration. There are 6 points which have been answered in this circular. The first is, the original equipment manufacturer offers warranty to customer and provides replacement of parts and or repair services to the customer during the warranty period, without separately charging any consideration at the time of such replacement or repair services. So original equipment manufacturer, say, again, we can take the example of Tata, in this case, Tata Motors. So whenever the main product is being sold, it provides the warranty, and it says that in case anything happens, it is a free warranty, your product will get replaced, say if it happens within a period of 1 year or 3 years, as the case may be. And even there will be a repair services for which there will be no charges. Replacement, there will be no charges. And that is happening at the time when the goods are being sold. So the value of original supply of goods provided along with the warranty by the manufacturer to the customer includes the likely cost, because the company is knowing that in future there is a likelihood chance that out of 100 units, my 2 units are going to require a replacement under warranty. So that cost has been considered. Includes the likely cost of replacement of parts and or repair services to be incurred during the warranty period, on which tax would have already been paid at the time of original supply of goods. So when the product is being sold, they know, okay, this is going to be my future warranty cost. It is embedded in the original sale of goods, the price which is there. So the value of original supply includes the likely cost of the repair or replacement. Hence, no further GST is payable on that when the actual replacement is happening, when the actual repair services are happening under warranty. So this is a normal, simple transaction. Okay. If additional consideration is charged, then GST is applicable. Right. So for those repair services, if you say, okay, if the dealer says that, okay, I'll replace the parts, but for services, I'll charge, say, 1,000 rupees extra. Okay, if anything extra is being charged on that 1,000 rupees, GST will be payable. Then one more important question. What about the input tax credit? ITC is not required to be reversed by the manufacturer as it is not an exempt supply. So here, when it is talking about manufacturer, in say example, we take Tata Motors again. ITC is not required to be reversed by the manufacturer, because when the sales price of the original product, say that vehicle includes the cost which is going to be incurred in future for those warranty products. So that is not considered to be an exempt supply, because the tax is already being paid on that original value. So no ITC reversal is required to be made in this example by Tata Motors. Then we now come to the distributor. A distributor of a company provides replacements of parts and or repair services to the customer. So now the distributor has got the warranty parts from Tata Motors. I'm just taking Tata Motors because it's a very common name, a generic name, nothing personal or specific about it. The distributor of a company provides replacement of parts and or repair services to the customer as part of warranty on behalf of the manufacturer, and no separate consideration is charged by the distributor in respect of the said replacement and or repair services from the customer. So the distributor is also giving it free. Repair services free, warranty replacement of the parts free. Then the circular says, as no consideration is being charged by the distributor from the customer, no GST would be payable by the distributor on the said activity, because there is no further consideration flowing. This is a normal, simple example. In case additional consideration is charged, then GST is applicable. It is same like the earlier case of the manufacturer. If apart from the normal, see, there are, I think extended warranty is still one more question. I'll come to the extended warranty. But in case if there is any further charge which is being charged, say, for the repairs, then on that GST is payable. Then comes the point about the replacement. GST implication for distributor with respect to replacement of parts or provision of repair services on behalf of the manufacturer. Consideration is charged from the manufacturers. So here, which example? This is the example where the distributor is replacing the parts like that had happened in the case of Tata Motors, right? There he is replacing the parts out of his own stock. Then in that case, on that value of stock which he is using for making the replacement, outward GST is to be paid by the distributor. He will charge to Tata Motors. The manufacturer can avail the ITC. No reversal of ITC with respect to original supplies made by the distributor. Distributor will not have any ITC issue in that, because there he is buying the product and he's selling it to the OEM manufacturer, and he's supplying that part to the end user, right? End user, or maybe it could be down the line, it could be the ultimate service provider who is actually providing the service to the end user. So there he will have to charge GST. Okay. Then there is one more situation where requisition is raised to the manufacturer. So when there is a requisition which is raised to the manufacturer, it again falls back to the normal scenario wherein the manufacturer company is providing the free replacement parts at free of cost to the distributor for providing it to the final consumer, where no GST was required. The parts are again coming back. There is a requisition which is made and the parts are coming back from the manufacturer. There is no GST liability to be paid if no additional consideration is charged by the distributor, and no reversal of ITC with respect to original supplies made by the distributor. So no ITC reversal and no GST liability in this second case over here. Okay, now there is one more situation. GST implication for distributor with replacement of parts or provision of repair services on behalf of the manufacturer. So replacement by the distributor from inward supplies already made to him by the manufacturer. Here in this example, the manufacturer had already made certain other supplies, chargeable supplies, not the free supplies, to the distributor, and out of that he is replacing. What will happen? The manufacturer can reduce outward GST liability subject to fulfillment of other conditions. So, for example, there was a product which was under warranty. Similar product is there which is out of warranty. So that is a saleable product. And practically when we see, the companies don't know that how many requisitions are going to come from the end user regarding a defective part under warranty or a defective part out of warranty. And that is always the dilemma for the companies. So the companies just keep the supply and they, with the distributor, they just send the supplies. Now, in this case, where the supplies are already sent to the distributor, GST is charged, and that supply is now going to get used towards the warranty out of those goods. And if the manufacturer issues a credit note as per section 34(2) of the CGST Act, qua those products, and he can reduce his GST liability to that extent. Of course, 34(2) has a condition that the recipient of the supply will also have to reduce his input tax credit. So the distributor will also have to reduce his input tax credit, because that is going to become a free supply instead of a chargeable supply in that case. So that is also mentioned. Distributor needs to reverse the proportionate ITC as per credit note issued by the manufacturer. Both will be at par. It cannot be that the one person will reduce the IGST, I mean the GST liability, and the other person can take full input tax credit. That is not possible. Next, replaces free of cost to customer but charges from the manufacturer. So now replacement is done by the distributor, but that product he's not charging anything to the customer, but for that he's going to charge to the manufacturer. Yes, it becomes a supply, outward GST liability to be paid by the distributor, and manufacturer can avail the ITC on the same, subject to fulfillment of other conditions. This I was talking of extended warranty. So if the customer enters into agreement for extended warranty at the time of original supply, extended warranty becomes part of the value of composite supply, the principal supply being the supply of goods. So this extended warranty, say if you are buying a car, the car has a normal warranty, some parts have normal warranty of say 1 year. At the time of buying the car itself, you take 2 years extended warranty at the time of the buying of the car. The rate applicable to that will apply. It could be a car, it could be an air conditioner, it could be any other instrument, because cars, they have a higher tax value, that is why. For others, it could be lesser tax. But the point is that if the extended warranty is being taken before the original supply, it will get, say the original value of that product is say 1 lakh rupees, extended warranty 5,000 rupees extra. The bill is for 1,05,000. On 1,05,000, it's a composite supply. The tax rate as applicable to supply of goods will apply. So on entire 1,05,000 rupees, say 18% is applicable, 18% is to be paid. Customer enters into agreement for extended warranty after original supply. So the original supply has happened. Subsequently, he says, I want to now enter into an extended warranty. Then it's a separate contract. GST would be payable by the service provider, whether manufacturer or the distributor or any third party, depending on the nature of the contract. So whomsoever is entering into that extended warranty agreement, that person will be liable to pay GST. Then again, that needs to be seen whether it is with parts, without parts, pure services, whether it's comprehensive or non-comprehensive, basically. So what kind of warranty that is there? It's not the AMC. It is with whether the services are included in that or not included. I think that is the extended warranty part. Right. So so supply of goods or services, that will have to be seen. Fine. So I think these were some clarifications till now. What we have seen is GTA services, ISD versus cross charge, warranty. These were some of the main ones. Let's see ahead. And directors, RCM on directors. These were some of the points which we have seen. Now let's move further. There are various other clarifications. This is relating to the refund related issues. So now this is with regard to rule 36.4. 36.4, now we know that 2B has become mandatory. When a refund is being applied for a tax period, it should be restricted to the ITC on inward supplies reflected in GSTR 2B of the said tax period or any tax period. So at the time of filing a refund application, of course, at the time of filing 3B, it is mandatory that you now match your 3B with your 2B. Similarly, maybe in some case it may not have matched, or maybe the credit may have been taken later. And now there's a refund application being made. So in those provisions, there is now a clarification that again, that also the officer will have to ensure that it is matching with your 2B. At the most, your refund application, they will see for the cumulative tax period till the date of filing of the the refund, but not for any of the subsequent tax periods. So that has been mentioned over here. Okay, the next amendment is regarding Rule 89.4. Now, Rule 89.4, if we understand Rule 89.4, it has the formula. There was an amendment last year in July 2022, whereby in the formula for claiming the refund, the FOB value was announced that the FOB value will have to be considered while doing the calculation of turnover, of export turnover upon the total turnover. That was what was announced. The FOB value has to be taken. But there was a confusion in the department also. The department in the numerator, they were taking the FOB value. In the denominator, they were taking the CIF value, because in the shipping bill, in the GSTR one, the CIF value was mentioned. But the formula now says it has to be taken, the refund will be granted only on the FOB value. So what should be done? So what was happening? In the numerator, say 100 rupees was coming as the FOB value, CIF value was coming as 105, the dealers were getting reduced refund. The interpretation of the department was incorrect. Because what you can compare is apple to apple. You cannot say that in the numerator, I will take the FOB value, and in the denominator, I will take the CIF value for the same transaction. Because in the formula, wherever they have told that the adjusted total turnover, the value of export is to be taken at the FOB value. And if we see that Rule 89.4, that notification entry, it nowhere says that for the adjusted total turnover, you need to take the CIF value. It has given a common, what we say, the nomenclature or the export value has to be taken as the FOB value, and which will apply to both the numerator as well as denominator. This was an issue. So that issue has now been clarified, that in the numerator and the denominator, it's mentioned over here. For the purposes of this sub-rule, the value of goods exported out of India shall be taken as FOB value as declared in the shipping bill or bill of export, as the case may be, as per the shipping bill, or the value declared in tax invoice, whichever is less. Right. So this was a common explanation which was applicable to the entire formula, the numerator as well as the denominator. That was not being adhered to, and that is now this clarification has come. So a welcome clarification. थोड़ा refund ज़्यादा मिलेगा या proper मिलेगा. Okay. Okay, now this is regarding Rule 96A, admissibility of refund in cases where export of goods or the realization of export of services is made after the time limit provided under Rule 96A. So just to understand, there's a time limit which is provided for realizing the consideration of the value of the goods supplied or value of the goods exported or the value of services exported, right? And say there's a time limit which is given. Now, two things have happened in this, two issues have happened over here. One thing is that, say the goods have been exported, the time limit has been not adhered to, the realization of the consideration is late, whether it will be considered to be an export or it will not be considered. So the first clarification says, in case of export of goods, as long as the goods are actually exported, or as the case may be, payment is realized in case of export of services, even if it is beyond the time frame as prescribed under 96A1, the benefit of zero rated supplies cannot be denied. So department was denying the benefit. You have not received the money in time, you will not get the refund at all. That is not the case. Accordingly, it is clarified that in such cases on actual export of goods, or as the case may be services, the said exporters would be entitled to refund of unutilized ITC in terms of section 54(3) of the CGST Act if otherwise admissible. So the admissibility remains. That is one point. Further, subsequent to export of goods or realization in case of export of services, exporters will be entitled to claim refund of IGST so paid earlier on account of goods not being exported, or as the case may be, payment not being realized within the time frame as per 96A. It is further being clarified that no refund of interest paid in compliance of Rule 96A shall be admissible. So what they are trying to tell here is that ultimately the export benefit will be granted, refund will also be granted. So at the end of say 12-month period, when the realization has not happened, the department can issue a notice and recover the refund already granted. And that provisions are there separately in the law that the refund granted will be recovered. Okay, fine. After say 18 months, the payment is being received. Okay, so the person should again get back the refund which was recovered from him. Fair enough. So that has to come back. So for that coming back, now there's a clear-cut clarification. It says that they would be entitled for the refund of the tax paid earlier. This was already there in the provision. Officers were not listening to this. So again, at least it will be a clarification which we can provide to the officers that this refund is ultimately eligible. There was one more issue in this, which was regarding that what happens, say, when I claim the refund in such cases, my electronic credit ledger gets debited at the first instance. I should have got the refund in 12 months. I have not got the refund. Say I had a refund of 10 lakh rupees. My electronic credit ledger was debited by 10 lakh rupees. At the end of 12 months, I did not get the refund. I had to make payment, or rather, I had got the payment from the department. They had recovered it. I had made the payment back to the department of the refund along with interest. Now my money has realized. What I had paid, I get back. But my electronic credit ledger, that debit, if it is not happening, if my payment which was made, that debit which had happened in the first instance, not in the second instance when I got it, the amendment came at the first instance. When that payment is being made, this amount should get recredited, or that should be available for the refund, which was not happening. That also amendment had come in at some point of time earlier. Then certain clarifications on TCS by e-commerce operators. Okay, this is the case of e-commerce operators where multiple e-commerce operators are involved. Yeah. So say there's the supplier. Supplier is transferring the goods to one e-commerce operator, selling through one e-commerce operator. There is a buyer side e-commerce operator also, and then there is the buyer. So there are two e-commerce operators. The issue was that who will collect TCS? That was the issue. The clarification says that the supplier side e-commerce operator will collect TCS because he is the person who is going to make the payment to the supplier. Hence, TCS should be collected by the supplier side e-commerce operator when two e-commerce operators are involved. This is clarified in circular number 194. Similarly, if the goods are being supplied where the supplier itself is the e-commerce operator, there's a buyer side e-commerce also. There are only two e-commerce operators and one final buyers. Earlier, like there were 4 entities. Here there are 3 entities now. So then what will happen to the TCS? So in this case, the buyer side e-commerce operator, since he is making payment to the supplier side e-commerce operator, or rather the supplier who himself is the e-commerce operator, the buyer side e-commerce operator will have to collect TCS and pay to the government on behalf of the supplier e-commerce operator. Okay, then certain clarifications regarding issuance of e-invoices. Rule 48.4 says that e-invoice is required to be issued in various B2B supplies. Or rather, only clarification which has come is that when supplies are made to the government departments, they are B2C generally, except where the government department is also registered for the purpose of TDS. That government department is not registered under a normal GST number. Since that government is required to deduct TDS, say, only for TDS purposes, for the payments made to contractors, they are required to take a GST registration numbers. Then, qua such government entities, the persons who are dealing with them, they will have to issue e-invoices to them, and not the normal regular other invoice, tax invoice. Okay. Then the next clarification is regarding the manner of calculation of interest amount liable to be paid under section 50 subsection 3 of the CGST Act in respect of wrongly availed and utilized IGST credit, clarifying inter alia that in cases of wrong availment of IGST credit, this is only regards to IGST, the balance of ITC in electronic credit ledger under the heads of IGST, CGST and SGST taken together has to be taken in consideration while calculating such interest liability as per Rule 88B of the CGST rules. Now, what does this mean? Where ITC was availed, it was wrongly availed and utilized. Okay, I had availed, say the dealer had availed ITC as IGST. It was wrongly availed, wrongly utilized. But there was balance. It should have been taken under SGST or CGST. So that balance was already available. SGST, CGST credit balance in the electronic credit ledger can be set off against my IGST liability. So that balance was already lying with the government. Then why should the dealer be asked to pay interest on such amounts? Had he known, had the taxpayer known that it's a wrong credit which he has taken under IGST, he could have reversed it through SGST and CGST. So hence this clarification, again a welcome clarification, that in case of any IGST reversal which is required, the balance of IGST, CGST and SGST, all the three needs to be taken together to consider the liability. For example, 10 lakh IGST credit was wrongly availed and utilized. There was a balance lying in CGST, SGST of 20 lakh rupees each. So there was excess credit available. Then why interest should be charged on the dealer? It should not be charged. So that is the example. The only point is what happens in the case of CGST and SGST wrongly availed. Well, although the circular is silent on this, but since for CGST, IGST credit can be utilized, and similarly, since for SGST, IGST credit can be utilized, the same analogy should apply to CGST and ISGST to that extent. Of course, CGST to SGST, that will not be allowed. That is not allowed. That can still be tried out, but I don't know, that's going to be really very difficult. But at least, although not mentioned in the circular, in case IGST balance is available and there's a CGST reversal which is coming, the interest should not get charged on that amount based on the analogy of this circular, although it is not mentioned. Okay. Very welcome. Circulars have come. One more has come regarding the 3B versus 2A mismatch. But I think here, this circular has not been granted wholeheartedly. We were already having circular number 183 regarding the confirmation letters, which can be issued by the suppliers to the recipient of supplies. In case of mismatch, there were some reasons which were mentioned, that if there is a B2B, the GSTI number has not been mentioned. The details have been mentioned in, say, B2C instead of B2B. In such cases, the taxpayer, the supplier,
can issue a confirmation letter to the recipient for ITC mismatch. So that extended period, which was there for 17-18, has now been extended for the periods from 1/4/19 to 31/12/21. It is not for the full financial year 21-22, but only up to 31st December 2021, because from 1st January 22, Rule 36(4), 16(2)(a) AA had come into play, and whatever credit is available as per to be, that only was required to be taken. So this concession which has come is only for this period. Again, this clarification is linked to Rule 36(4). In Rule 36(4), so in Rule 36(4), what had happened from 9th October 2019 till 31st December 2019, additional 20% was credit ITC was allowed to be taken against what was appearing in 2A. For the subsequent period, from January to December, additional 10% was allowed. From January 21 to December 21, only 5% was allowed. So what this circular has done, it has allowed ledger confirmation for these periods, for the period 19 to December, 1st April 19 to 31st December 21, only for these periods, not to the periods after that, and subject to the limits which are given in this table. And for that, the circular number 193 has been issued, which clarifies all this position. Sorry. Kindly bear with me. I think I'm having a sore throat, so maybe the voice is coming a bit low. This is an example. I'm not going through the example, but I'll be sharing my slides so the organizers can share it to the participants, this example. Okay. Next came the clarification regarding filing of appeal for Tran 1 and Tran 2. After this, Union of India versus the Philco Trade Center judgment, wherein manual filing of Tran 1 has been allowed. Bhavin, I think I'll have to take a short break of 2-3 minutes. Is it okay?
Sure, sure, sir.
Yes,
Sure,
sir.
sir. Yes, sir.
One moment.
Yeah, yeah.
And we can discuss the upcoming events till that time.
Sure, sure you can. Shirdi event.
Okay, we have a national tax conference happening in Shirdi on the 21st and the 22nd of August. And there is, yes, Reena bhai, could you talk about upcoming events at CGPI?
So at CGPI, as I said earlier, that we have a simpler for GST practitioners. So we are in discussion about having lectures for the beginners in GST.
Oh, interesting.
New practitioners entering into the GST arena, which practitioners who want to start their GST practice now. So that is, we are also discussing a series of webinars on the so there is one webinar that we call the discussion about some critical judgments that have been passed. One we had last week, and we will continue to do that as well in future. If there are any critical judgments that have an impact on the GST field, we would love to hold such a webinar at CGPI. And so, yeah, this is what is in pipeline for us. We are also planning our second C, the soon as we finalize the date and the venue. So the is the that we have. So yeah, over to you, Khyati.
I would like to let the participants know that there's going to be a short Q&A session. You can leave your questions in the chat box, and we'll get the speaker will answer them after the session. So please leave your questions in the chat box if you have any questions for the speaker. I think Pranav is back. Yes.
Yeah, hi. Sorry for the inconvenience actually.
No worries, sir. Sir, are you feeling okay, sir?
Yeah, I'm okay. Yeah, I'm okay. So just some sorry. Fine. We continue with, and of course, whatever questions are there, we can take up at the end of the session. I think I'll try to finish it off at the earliest. Okay. So next is regarding manual filing of appeal for Tran 1 and Tran 2. So in pursuance of the Supreme Court judgment in the case of Philco Trade Center, the government has come out with enabling provision for filing manual appeal in the case of Tran 1 and Tran 2. And for that, the specific provisions have come because there is no specific provision. One important point is that there is no part payment which is they are going to ask for filing these appeals. So I think that should be saving grace for all. And those who have missed the deadlines need to file the Tran 1 appeal. I think the time limit is 15 days from the date of this circular which has come. Notification number 38, which has come. From that, the time limit will start. Okay, then certain recommendations regarding the extension of the amnesty scheme, the filing of GSTR 4, 9, 10, and revocation of cancellation of registration and deemed withdrawal assessment orders. These 5 notifications have been issued and the time limit has been extended from 30th June till 31st of August. Okay, then certain points regarding the generation of e-way bills for gold and precious stones. As of now, there has been an exemption for from e-way bills for movement of gold and other precious stones. Now, what is going to happen is the government has come out with a different nomenclature. The nominated agencies by the government, they have been given a threshold limit of 2 lakh rupees. Below that, the respective state will have to come out with a notification. That notification can give a threshold limit of either 2 lakhs or 3 lakhs, minimum 2 lakh threshold limit if they want to give, beyond which e-way bill will be required in the case of movement of this precious stones. As of now, as per Annexure 14, Annexure 1 to Subrule 14 of Rule 138, this had been exempted. But now 138F is a special provision which has been introduced. It is notwithstanding anything contained in Rule 138, the normal e-way bill provisions. Special provisions have come for such valuable items. And there, the government has told that now it will be mandatory, except if the respective states tell that e-way bill is not required, then the e-way bill will not be required for that, for the movement of the goods in that state, or subject to a limit which will be provided in the notification to be issued by the state. So I think that is what is that has come up in the case of e-way bill for gold and precious stones. Here also, I think we did not go much into this. This is regarding a special procedure to be followed by manufacturers of tobacco, pan masala, and other similar items. wherein the government is in this. Now we can just analyze, what the government is doing. The government is trying to get all the data from such manufacturers, and the data is something like our excise registers that we used to have earlier. All the information about the inputs on day-to-day basis, all the information about how much is the production capacity and how much is the actual production on per day basis, per shift basis, how much machines are being used to have that production, what is the installed capacity of each machine, and what is the actual output of each machine and of each tray or each track which that machine is having for the production, assembly, packing and distribution of those goods. And after that, what is the monthly input output ratio? All that information along with tagging of those particular machines and giving an identification to that machine of the manufactured goods that are going to get manufactured through those machines, especially in case of tobacco, pan masala, and similar other items, as well as mentha oil. This is not applicable to dealers in general, but I just wanted to bring out this point that in case the government wants to track and get the information, this is how they are moving. When we go through the notification, each of the notifications are having clear-cut tables wherein how to keep that data. Each of the tables have been very categorically mentioned over there that you need to keep your data day-to-day, shift-wise and month-wise of all the input, outputs and production capacity. And they will be now be required to do it this from 1st of October 23 onwards. I think these are the various forms which have come. We need not go into those. Okay, regarding the menace of fake registration, I think this is a huge thing which is happening. Fake registration, fake ITC, and real government is really trying to, strengthen each and every loophole which the new dealers or the dealers are trying to take into consideration, and so many fake companies have cropped up. I think you must all have been reading about it, listening about it. And okay, so for curbing that menace, the further strengthening of the registration process, notification 38 has come. Rule 10A is being amended to provide that the details of bank account in the name and PAN of the registered person to be furnished within 30 days of the grant of registration or before filing of statement of outward supply under section 37, that is form GSTR 1 or IFF, whichever is earlier. So earlier, anyways, there was a time limit of 15 days which was available to provide the bank details. Now, although the time limit has been granted as 30 days, but in case if you are going to file your GSTR 1 or IFF earlier, then the earlier date will apply. Further, there's also a rule which says that there will be a system-based suspension of the registration in respect of such registered person who do not furnish the valid bank account under Rule 10A. Everything is becoming system-based. So in the system, if they don't see the bank account number within this particular time limit, the GSTR 1 has been filed, then there will be an automatic suspension of the registration. Okay, once the suspension is done, and if the bank account has been provided, then there is a procedure for automatic revocation of such system-based suspension upon compliance and with the provisions of Rule 10A. So that is also there. Also, there is an amendment to Rule 59.6 to provide that where a registered person has not furnished the details of valid bank account under Rule 10A, the said registered person may not be allowed to furnish the details of outward supplies in GSTR 1. Right, so even Rule 59.6 they have amended regarding filing of the GSTR 1 that in case you don't provide, so both way authentication has been made by the government to at least try to curb one of the aspects of bank account, because bank account itself, the companies were not furnishing their bank accounts also. the way these fraudulent activities were happening. Then amendment in the CGST rules to regarding registration. Similar, I think this we already considered. Okay. Then there was one more rule that Aadhaar authentication is necessary in the case of proprietary firms, authorized signatories, etc. If the Aadhaar authentication is not there, then the officer can go and visit the department. Go and visit the place of business and in the presence of the particular person. Now, what amendment has come that all other processes are there in their place. The requirement of physical verification of the business premises to be conducted in the presence of the applicant, that has been done away with. So even without the physical presence, the verification can still be done. So verification in high risk cases, even where Aadhaar has been authenticated. So two things: even if the Aadhaar is authenticated, the visit can happen. If the Aadhaar is not authenticated, the visit can happen. The physical presence of the person is not required. The visit can happen. If the person is not satisfied, he will again cancel the registration. Biometric based Aadhaar authentication in Puducherry, I think that notification has already come. Gujarat was the first, and the second is Puducherry. There it has started. Okay, so now this is the new procedure for recovery of tax and interest in terms of Rule 88C3. 88C is already there on statute since 2022. We all know about matching of GSTR 2A versus 3B and the notices which are being issued there too. Now what has come is matching of GSTR 1 with 3B. Of course, that was also there, but now a specific procedure has come for that also. So there's a new form GST DRC 01D to provide for manner of recovery of tax and interest in respect of amount intimated under Rule 88C, which has not been paid and for which no satisfactory explanation has been furnished by the registered person. So again, there will be a specific form 1D, mismatch between 1 versus 3B. It will be routed through GSTR 1D form. So you will get a notice. You need to reply to that notice or pay the tax if you agree. If you don't agree, reply to them. If you don't reply, then the provisions of section 73-74 will trigger. I think this is all procedural part of it. We can skip that. Similarly, for 2B versus 3B differences, the specific form is DRC 01C. Right? We already had 1A and 1B. Now we are having C and D. C is for 2B versus 3B, and from DRC 1D is for GSTR 1 versus 3B. I think that's the procedure for that. Okay, some other measures. To improve discipline in filing of annual returns, Form GSTR 3A to be amended to provide for issuance of notice to the registered taxpayer for the failure to furnish annual return in Form GSTR 9 or 9A by the due date. So two things have happened over here. One, for filing of GSTR 9, there was no outer limit, time limit, like we have for filing, for the other provisions. So now, first of all, there is now a time limit of 3 years for filing of GSTR 9. Beyond that, the system will not allow to file it. And for that, the notice will now be issued in GSTR 3A. 3A already there. They have amended it to include annual return also. Similarly, GSTR 5A. Now, this Form 5A was for OIDR services. Therein, there were breakup where the OIDR service provider used to provide details about supplies to unregistered dealers because he is required to pay tax only on supplies made to unregistered dealers. For OIDR service provider, if he is supplying goods to or services rather, if he is supplying services to a registered dealer, the registered dealer recipient is required to pay GST on such services availed under reverse charge mechanism. Okay, so that provision is there in its place. The only amendment which has now come is in the reporting part of it, where the OIDR service provider will also have to mention the information regarding supplies made to registered dealers. Now the government, like 2A, 3B, 1, 3B matching, they will also match OIDR to the recipient, whether he has paid tax under reverse charge or not. So one more tightening of the systems for the taxpayer. I think this we can skip, duty-free shops. Okay, rule 162 has been inserted. It's a new rule which has come in the statute book to prescribe the compounding amount for various offences under section 132. We are aware that there is a section for compounding of offences, but what amount will have to be paid for compounding of offence, that was not mentioned in the rules. So this chart has now come over here, which says that in respect of the offence. So if we see the offence under section 132(1), A, C, D, E, the first four offences, we with this table over here, 132 clause 1 and 132 subclause 2. Okay, in that there's an imprisonment. In this first, there's an imprisonment of 5 years in case the liability is more than 5 crore. The tax evasion by way of input tax credit, or rather it is more related to fraudulent input tax credit, fake bills, etc. In those cases, the liability is there and with imprisonment of up to 5 years. Here the imprisonment is between 2 years to 5 years, and liability more than 2 crore rupees in such cases. Okay, so now whatever normal tax, interest, penalties there, that is there. अगर imprisonment से बचना है तो compounding of offense करो. Compounding of offense, what is the tax payable? Up to 75% of the amount of tax evaded, or the amount of input tax credit wrongly availed or utilized, or the amount of refund wrongly taken, subject to minimum of 50% of such amount of tax evaded. So minimum 50%, maximum 75% would be the additional compounding fees which will be required to be paid in case of liability more than 5 crores, imprisonment 5 years wala matter. In the other matter, it is 40% and 40% to 60%. Here it is 50% to 75%. Similarly, for other offences, it is 25% of the tax evaded in all other cases. In all other cases, it is 25% of the tax evaded. For the fraudulent input tax, etc., it is 50% to 75% and 40% to 60%. I think this is again only related to the information which is required. Okay, one more amendment which is sought to be implemented is in the IGST Act. The Council has recommended insertion of clause CA in section 10(1) of the IGST Act to clarify the place of supply in respect of supply of goods to unregistered persons. So here, this is a supply without movement of goods, 10(1)C. So 10(1)CA, I think it will come to supply of goods to unregistered person. I think they'll try to come out with some clarifications in that aspect. What should be the liability? Possibly that has to be, the liability has to be CGST, SGST less, because if it's to unregistered person, how do you identify where the goods are moving, right? So it has to be on that only. Recently, many notices are being issued wherein, especially in the chemical market, wherein if there is no movement of goods and the goods have been handed over at the Bhiwandi warehouse from one person to another, they are considered this as supply without movement of goods and trying to levy tax on that, that it's a wrong transition. There is only bill movement and there is no goods movement, and hence tax is payable. Something similar, I think, will come for this also. Let's see. IT system reforms, etc. And I think the last slide, it is on the GST rate changes of various, last 2 or 3 slides, but I'll not go into the rates of taxes. Just wanted to have one clarification in this. If you see the first entry, uncooked or unfried snack pellets, regularized payment of GST on uncooked, unfried snack pellets during the past period on as-is basis. The earlier rate was 18%, the amended rate is 5%.
If we see one more entry, there also in intimation zari thread regularized on as is basis. Fish soluble placed regularized on as is basis. Similarly, if we come to others also. So what do you mean by as is basis? When we see the circular 200, which has come along with this, the circular mentions that there have been interpretation issues in many of these entries. There have been amendments in these entries. There have been amendment also in these entries. So whatever has happened has happened. Say there was an interpretation issue. You should have charged 18%. You have charged 5%. Okay. Or vice versa, 5% to 18%. So whatever has been done has been done. Now we are clarifying from today onwards, the rate is, amended rate is 5% only. So you charge from that. So it means based on interpretation issue, if the wrong rate was charged, there will be no repercussions on the supplier. Neither he will be able to claim refund, nor he will be liable to pay the differential tax or whatever. Somewhere the rates have increased, somewhere the rates have reduced in different categories. So I think, see, in so many cases, it has come on as is basis, right? So these are the various notifications. Regarding the ground clearance, that notification is still awaited. It has not come in case of utility vehicles. So let's wait for that. The last change which I would like to take up is the change in GST rate of services. Satellite launch services, where recently, I think it is all our satellite is Chandrayaan. It is almost reached the orbit of moon, and will be landing on the moon in few days from now. It is a big achievement for India. In continuation to the support for such organizations in the private sector, the entry has now been edited. GST on all satellite launch services, there will be an exemption from GST, and earlier there were only few ISRO and Entrix and New Space India were the only three entities which were eligible for this exemption. And now all such entities who are supplying services of satellite launching of satellite, they will now be eligible for the exemption. With this, I think I come with this happy note. I come to an end of the deliberations on the 50th GST Council meeting. I thank all of you for a very patient hearing, and thank the organizers once again for giving me this opportunity for sharing my views on the decisions given by the GST Council meeting. Some have already come, some are yet on the way. So let's see how they get actually implemented and how the department looks at it. This is our perspective of the amendments. The department's perspective will come and follow. Anyway, thank you all of you for a very patient hearing.
Sir, if you would be kind enough to take a few questions, we have a few questions. Bhavin bhai, take those questions.
Sure. Sir, with regards to that ITC of cross charge, say if someone is not not eligible, the branch is not eligible for full ITC, then what would be the scope of ITC of the cross charge which has been made? Will it be subject to Rule 42 for reduction? How?
Yes, so I think the first question which will come up, say if the branch is not eligible for input tax credit, say we take the example once again that the branch is supplying exempted goods. Branch is supplying exempted goods. Head office has done cross charge of services to the branch. So branch is not eligible for full input tax credits. To the branch, Rule 42 is applicable. Okay. So once that applicability comes to the branch of Rule 42, the value which is to be taken should be as per Rule 28. Second proviso will not apply. So you have to go through all the tests, Rule 28, 1, 2, then Rule 30, Rule 31, and first proviso to Rule 28. So all these parameters will have to be seen by them and for the valuation. You got the point here?
Yeah. Sir, another question is whether RCM is covered under aggregate turnover.
Whether
RCM is covered under aggregate turnover. So whether where RCM is applicable, whether that is to be covered under EATO. I think it is not.
Where is the question?
It is not.
So RCM under forward charge.
Related.
I think I have not seen the question, but I think I can just give my views. If RCM is applicable, so are we talking it from the recipient side or from the service provider side or service recipient side? For the service recipient side, although he is liable to pay tax under RCM, it is not to be taken into aggregate turnover. For the service provider like a GTA, suppose he was under RCM, that has to be taken into his aggregate turnover while calculating the aggregate turnover. So for the service provider, you need to add it. For the service recipient, you need not add it.
Sir, one question is, in one case, the client's export did not happen due to strike at destination point. Application for refund was rejected, stating there is no clause for refund in such cases.
So actually, the goods have not left India. So two
strike
things.
At destination point. Port.
Goods moved out of India.
Yeah.
So there is a strike at the destination port. Goods moved out of India. So what happened? Whether the goods have ultimately reached the customer or not reached, point one, or whether the goods have come back or are still lying at the port. What happens to the realization of the foreign exchange that was required to come? So if both the parameters don't trigger, if you don't get the realization also, you will not be eligible for the refund.
Yes, sir. And anyways, sir, I think EGM might have also not been generated. So refund won't be possible without EGM, I think.
Yeah.
Whether GST number with 10 of government department is accepted while generating e-invoice. I think this is not.
Now they should, because now they have brought in this specific provision. So it should be there now, because it is specifically applicable. This amendment which is found, this should become applicable.
Yeah. Okay. Sir, I think we have finished with the questions which were there. Now, sir, coming to the pleasant task of vote of thanks. Friends, you all will agree that it's very important to keep ourselves updated. I am sure that today's 50 slides presentation on 50 changes after 50th GST Council meeting by CA Pranav Kapadia will surely help us all in keeping ourselves updated. On behalf of MCTC and CGPI, I am grateful to CA Pranav Bhai Kapadia for accepting our invitation and presenting a detailed deliberation on today's topic. I would also like to thank all the attendees for attending today's session especially on the due date of GST compliances. Thank you everyone.
Thank you everyone.
We would like to tell everybody that the link is shared on YouTube and you can view this on YouTube later.
On MCTC YouTube channel.
Thank you.
Thank you. Thank you, Pranav bhai.
Thank you, everyone.
Pranav bhai, please share the presentation if possible.
I already mailed it to you from my office.
Yeah.
It is already been mailed to your email ID.
Yeah.
You can send a PDF to the. I think the PPT would have come. You can send the PDF. No issue.
Sure, sir. Sure.
Okay.
Thank you, sir.
Thank you.
Sir. Thank you.
Thank you very much.
Enough, you may end the meeting.